An open-cast coal mine in central Kalimantan in the Indonesian part of the island of Borneo. A large swathe of rainforest has been cleared for the diggers, trucks and extraction equipment. Local people say waste from the mine is also finding its way into the river they rely on.
Sedang keruh kelihatan ini kalau sudah banjir gini nih, naik ini airnya keruh, sudah nggak bisa mandi, sudah gini nih Pak. Ya kalau mandi ini tanah ini melulu itu. Gatal mungkin sudah, apalagi untuk dikonsumsi itu sudah nggak bisa. Kalau dulu bening air ini bersih, nggak seperti sekarang, nggak bisa sudah. Seperti ya enggak lah menerima pertambangan gini, masuk tuh enggak lah gitu. Cukup ini aja, enggak, kami nggak mau lagi itu.
The company behind the mining activity here is Indonesia's Borneo Lumbung, which got a $1 billion loan in 2012 from Standard Chartered Bank, the UK's second biggest bank. More widely, research by the anti-poverty campaigning group the World Development Movement shows the UK's 5 biggest banks, HSBC, Barclays, RBS, Lloyds and Standard Chartered, helped fossil fuel companies raise £170 billion between 2010 and 2012. The group wants UK companies to have to disclose these investments and ultimately to be prevented from making them.
If we're ever to meet our climate targets, we need to put a stop to all new investment in fossil fuels, including in projects such as the coal mining in Kalimantan. At the moment, the financial sector in the UK is a complete free-for-all. Banks, pension funds and other investors are completely free to plough billions of pounds into these sorts of projects. This needs to change.
Standard Chartered issued a statement saying, "We're committed to working only with clients who conduct their business in a sustainable manner, and we work closely with them to ensure that projects adhere to best international standards and practices." If all the world's reserves of fossil fuels were burned, it would raise the average temperature of the world by 6 degrees Celsius. But the UK and other governments have agreed a limit of 2 degrees. To meet that target, we'd have to leave 80% of fossil fuels unburned. Companies listed on the London Stock Exchange hold more coal reserves than firms on any other stock exchange in the world. Almost every British person's pension fund has cash invested in coal, oil and gas through the London Stock Exchange. But if governments decide to prevent the extraction of fossil fuels, the so-called carbon bubble will burst.
What we see is a divergence between the financial markets continuing on a 6-degree trajectory, whereas the climate policy discussion is down at a 2-degree world. And the further apart those two get, the bigger the problem we have in terms of bringing the finance to solve the climate problems and ensuring that capital isn't being wasted on carbon intensive activities. And the longer that goes on and the further apart they get, the greater the risk is to both the financial system and the climate.
Earlier in 2013, the World Development Movement visited the coal mines of Kalimantan. Another UK company, BHP Billiton, is looking to mine nearby. If this goes ahead, this part of Borneo, with its forests teeming with life, its rivers full of fish, and its people still able to live from the land, could be changed beyond recognition. The World Development Movement hopes that having to disclose investments in fossil fuel extraction and to count carbon emissions from that activity in their own carbon footprint could dissuade many companies from ploughing cash into this sector.